Hey everybody, good morning. It's about 8:40 in the morning here on the 5th of October 2022. It's Wednesday. A few things happening today, but all in all, we've just completed some massive green days in the stock market. I want to talk a little bit about that. Before I get into all of this, of course, you all know this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, manage your own risk, do your own research, and I'm just giving my opinion on the market. If you need access to our Discord, you can find all that information on BitDoctor.org. You can also find information on how to subscribe to our free biweekly newsletter. So that's all on BitDoctor.org as well. Okay, so let's go ahead and take a look at the chart here. So not a whole lot has changed. There is the potential for maybe a little bit more continuation to the upside. I want to talk a little bit about that. I say not a whole lot has changed, although this chart probably looks a little different than when we looked at it yesterday. Yesterday we were looking at this, and this is still potential here. And there we go. For this to be down here, for this 5 to be here, this 3 to be here, and still the potential that this is an expanded flat. So from here, we have an A, we have a B, and then we've got the C. I'm not going to get too caught up on the possibility for that to be the case, because at the end of the day, even if that was the case, the result is still basically going to be exactly the same. The only difference here is, this 3 will come down here, this 4 then would go here, and then we would get the 5. From a wave structure, 1, 2, 3, 4, 5, that does look a little better. But we were talking on the Discord yesterday, and I think this is important to pay attention. Elliott wave theory is one tool that you should use when you're analyzing charts, but it should definitely not be the only thing that you use for your analysis. What I look at mostly are fib targets. I use Fibonacci to kind of figure out where all of my targets are going to be. And then I take a look at the structure of the chart, the geometry, just to kind of get an idea for where things are going. So one of the reasons why I had this target up here, and we talked about this yesterday, I'm going to go ahead and zoom in on this, right? So from this, what I started with was a trend-based fib extension. I started here at the bottom of where I said yesterday potentially was the bottom of wave 5. I went up here to the top, which was the end of wave A, went down here to the bottom of here, which was the bottom of wave B. Now, for an expanded flat, we would expect the price action to go into, for an expanded flat, to go into the 1618 to the 175. Move this on over, and that's exactly where we landed. So we were talking about this yesterday. That was the target. That is where we went. So if we don't see accelerated selling from here, right? So again, I talked about this yesterday as well. A couple things that I want to see. This right here, we need to break that level. That's at about 37.53. Again, that's where this hourly candle got rejection. We had another rejection there, another rejection there, and then finally we pushed through. But this established some price acceptance. So you would expect there to be some support there. Just like what we're seeing right now, we're starting to see some support at this level right here. So, and that's, let me see if I can make that a little bit more pronounced. That level, from what we can see right now, there is some support right here. This was at the 1 o'clock hour yesterday. And then, of course, overnight, we've seen some support there as well. If we go and look left, we can see that there's some support here, here, and then resistance right here. This level is important, right? Just as I expect this level will be important as well. And again, that's at about 37.53. So if we break through this initial level right here, which is at about 37.6625, it's right where we are right now. If we can break through that and stay below that, then ultimately I want to see a break of this 37.53 level before we see continued move lower, in which case I would be looking for there to be some extreme support right here at 37.33. And I know we're just talking level to level to level, and I know that's really annoying, but I'm just talking about the significance and why some of these areas will find a little support, just like we've seen right here. Ultimately, my view is bearish, and I don't have any reason to believe that that's not the case here. But I do think that there is a potential that we can go a little bit higher. And in the next target up here, again, based on fibs, would be at about 38.62. Now, for this to be the case, right? For this to be the case, what we would actually have is something a lot different than what we're looking at right now. It really wouldn't even be an expanded flat or a broadening diagonal, a broadening wedge rather. It wouldn't be anything like this. It would be something completely different. But again, that's why I say that it's really not important to put your wave structure on here more than it is to recognize that we're not getting the rejection at the wave structure that we had as our primary, but now we're looking for, some signs of strength that it could potentially move back up. And, a couple things that you want to pay attention to here, if you've got the Wave Master, go down to a lower time frame. And what do you start to see? Well, you start to see that we've got a little bit of support right here, and it looks like we're going to have a little bit of a bounce. Now, of course, you've got your red and your white wave that are all in overbought. If these can get down into the neutral zone, which would be below about 75, then that's going to lend a little more to the bearish side. But let me just pull this up here, get my fib retracement, get our dominant low here, and try and get our dominant high right here. And let's see if we have any confluence, okay? So we talked about this level right here at 37.53. Well, we have a 236 here at 37.51. Are we going to find some support there? It's very, very possible. Where would the upside target be for that? It would be here at about 38.67, which, if I zoom out, happens to be right here at this 50, which is at 38.62. So is it possible that we see another 100 points from where we're at right now? We're at 37.66. Possible that we go to 38.66. So again, if we do find some support here, I would expect that it's very, very possible and maybe even likely that we do see that move. So what my plan of action is today, we were buying short positions yesterday once we were starting to reach the target that I was outlining. And my outline for the target was always as close to 3,800 as possible on ES. We did have some 3,800 and 3,805 trades that we took. We've already closed them out because we're not getting the sell-off that I was expecting to see. So you have to be able to adapt to what the market is telling you. And right now, again, I'm not seeing the weakness that I expected to see off of this potential for a wave E of wave 4. So are we going to go all the way up here to 38.62? I mean, that's possible. If we do happen to go up there to 38.62, does that invalidate our count? Well, we would have this overlap on wave 1, so it would invalidate some things. We'd kind of have to go back to the drawing table just a little bit here, but that's still okay. You can still have a bearish view even if your count may be wrong. And again, I may have to go back here and make some adjustments to my count, and I'm okay with that. I'm okay trying to figure out what happened here. And again, just for clarity, it's very, very possible that we do have the 3 here, the 4 here, right? So let's just talk about this for a moment. The 5 here, which would be of wave 3, okay? So let's just talk about this for a moment. I'm going to clear this all out because, sometimes this is what you have to do. And then from here, for the 3, we could have an A, a B, and a C, which we commonly see. Again, we talk about expanded flats. That could have been the 4 right there. Then what do we have? The potential for, for a 5th that was a little bit of, a little truncated, right? So if we get that wave 5 here, that's still not saying that, we're done going down. That just means that, we have to, take a look at this. Could we be in an expanded or an extended 23rd. I mean, it's very, very possible. I'm not going to speculate too much on this right now, but if this is the case, what we're really looking at here is an A going in for the B and then going up for the C, which would potentially happen at the end of the day Friday. It could happen on Monday before we start to see that move down. So again, this just kind of goes to show that, you know, you shouldn't get yourself tied up in a bias on Elliott wave theory alone, that you have to take a look at the price action, you have to take a look at your waves, you have to take a look at Fibonacci, and then try and figure out what the wave structure looks like after you've determined all of that. So as of right now, this does look a little bit like, you know, a little bit of like a corrective move from what we're seeing right now, which is still good. We're looking for corrective moves. I'm not sure right now how low we're going to go. You know, just looking at the hourly time frame, let me zoom in on this, then we'll go ahead and close things up here. From an hourly time frame, let's just talk about the support areas that we would be looking at. I would be looking at support right around here, right? So we've got some support right there, which is below the 236. We've got some support that we would see right there, which is above the 236. Do we see some support confluence here at the 236? Yeah, I can see it. We had some resistance here, here as well, a little bit of support there, resistance here. So I can see some evidence that this 236 is going to provide a little bit of support, but we do have some levels to pay attention to along the way. So that's going to, of course, you know, find a little bit of, you know, a little bit of support for some bounces in these areas. But ultimately, at some point, what it looks like to me is that we're going to find an area for a bounce and then move up from there. And again, the best way to find that out, which I've already showed you, dominant pivot low, dominant pivot high here, we'll pull this out. That 382 and the 236 that we have identified are probably the highest probability zones, which that's going to be at about 3716, which means SPX would be at about 3700. Remember, SPX, the actual index, is about 10 to 15 points lower than the ES futures. So keep that in mind as we, you know, as we realize some of these targets and decide whether we want to close our short positions or hedge long for a potential move up to 3867. We'll make a determination, you know, when the time is right and figure out what we're going to do from there. But as of right now, we've hit our target to the upside, which was 3800. We did go a little bit higher, which was at about 3808. The high there was 3808.75. The 3800 and 3805, our asks there did get filled. We've already closed them out, or at least I've already closed them out. So I'm just kind of waiting because, again, it does look like we're going to get up to that 50, which is at 3862. So it's a little bit higher than I was expecting, but you know, it's reasonable to assume that's going to happen when you've had something like this occur over just 2 trading days. We had a massive move up, so it's reasonable to assume we're going to kind of cool off a little bit, correct a little bit, and then go up for one more move, get more bulls on board, less bears on board, squeeze out more bears, and that's where we're probably going to be reloading if we get to that point. Depends on, you know, what decision we want to make, you know, if and when we get down here. But definitely we're going to be moving our stops to break even, so we're not going to lose any money, because if we go back up to 3800, chances are very, very good that we're going to go up to that 3860 or on SPX around 3850 level before we do start that retreat down to our downside targets. Okay, that is all that I've got for today on the S&P. I'm going to throw a little bit of a bone out there to anybody that's into crypto. We've been talking about this for a long time. This P&L that I've got on here hasn't changed, you know, since all the way back here on September 23rd when I put it there. The price was all the way down here, and I said, yeah, the chances are pretty good that we're going to go up to 20,570. Now, yesterday, a lot of the guys on the Discord, they took a short at 20,420. LO called out a really great top there, right? What did that mean? You know, that meant that we had these highs here at about 20,375, and we rated those stops. It went all the way up to about 20,460 or so, 2465. and then we retreated from there. And basically, you know, again, move your stops to break even, move your stops to a little bit of a profit, shave some of the position so that, you know, if you do take a stop, you at least took some profit on the position that was profitable. And, you know, then if it goes back up, you know, I'm still going to be looking for a move up here, you know, potentially a little bit higher, because again, this channel that I've got, looking at this channel from the low here, looking at this as the potential for an A, B, and then A, B, working on that C, which could go up to 21,000 at this point. And due to that, I'm going to go ahead and move this up here. I'm going to move this over. We're going to be looking for a move up to about 20,000. Sorry, not 20,000, 21,000 for this to finish the cycle before we see a massive move down. And I do say massive because I think it's very, very possible that we do see a decent move down, a move up to 21,000 to hit the top part of this channel before we see a move down. We want to see a move down back below 19,000 and maybe do a little bit of consolidation here, create a little bit of a bear flag before we go down. So, excuse me, that's my thought on Bitcoin. And looking at the wave structure, you know, the 12-hour is still moving up. The hourly is almost oversold. It does look like it's very possible we are going to see a little bit of a rebound here, you know, before we move down any lower. So again, just being cautious and being careful here. And again, let's go ahead and throw a fib on that and see what, you know, see what our wave structure looks like here when we throw our fib extension on here, and see if there's any confluence at that area. So if this is an A, we go down for the B. So we've got, let me try and pinpoint that closer. We've got the 100% at 20,628. I'm going to put the 1236 on there. That's at 21,067. And again, if we try and put some time on this, 21,067, if this were to be Friday at 8 o'clock in the morning, that would make a lot of sense. I'm going to go ahead and move that up there. So, you know, this is starting to look pretty good. You know, 20,628, probably we're going to find some resistance there, right? So again, we have this high here. We have a higher high here, just a little bit to raid some stops. You know, getting another higher high would make a lot of sense. And then we'll have to wait and see what happens from there. But look at the waves. On the Wave Master, I mean, not Elliott waves. Look at the Wave Master, see what it shows, especially on lower time frames. You're going to get your best entries on lower time frames, but you need to wait for the higher time frames to, you know, to get to that zone where they're best for shorts. And then you get to the lower time frames and really hone in on your entry so you can reduce your risk as much as possible. So again, this is what my thoughts are on, you know, on Bitcoin. Are we going to go a little bit lower? I mean, it's very, very possible that we go down here to about this area, at about 19,600 before we see that move up. And that would be okay too. And why do I use that level as, you know, as an example? Well, we've got a key level right here, and you can't ignore all of the resistance we've seen here before we finally broke through. You know, again, we broke through here, but then we fell right back down in. But now we've broken through and we've stayed up above pretty consistently. So if we come back down, I would expect that to be some support to create the fuel needed to get up to that potential area at about 21,000. No promises it's going to get there. It may not get there at all. I do have a very bearish view on Bitcoin in the short, even in the short term, right? So within the next 1 to 2 to 3 months, I do have a bearish view. But, you know, looking at this, it does look like we have the potential to go up a little bit more before we come down more significantly. Okay, guys, that's all that I've got for you right now. Hopefully that was helpful. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. And if you need access to our Discord, you can find all that information on BitDoctor.org. If you need access to our WaveMaster indicator, BitDoctor.org. If you want access to our bi-weekly newsletter, BitDoctor.org. All that information is out there for you. You can find us on Twitter. You can find us on Discord. And last but not least, wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.